Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. First, let's focus on the daily chart. The first key point is whether the pressure from the MA100 continues and whether the MA20 can hold. The current daily structure is very clear. The MA100 remains a key resistance zone above price dot as long as the MA100 pressure remains. Any rebound is likely to turn into a bull trap. When upside space is capped, it becomes very difficult for the market to form a strong trend continuation. The MA20 acts as the short-term defensive line for bulls. If the MA20 holds, price can continue to consolidate sideways and potentially challenge the MA100 again. But if the MA20 is decisively broken, the daily close below, it becomes critical. That would mean the short-term support of this upward structure has failed. The market would shift from a pullback and repair phase into a breakdown-driven move. Once momentum weakens and price steps back, this is something that requires special attention. Breaking the MA20 itself is not the scariest part. The real danger is breaking it and failing to reclaim it. A rebound that cannot get back above MA20 is a classic case of support turning into resistance, and the downtrend will accelerate significantly. Now let's look at the indicators. The MACD has formed a bearish crossover and has officially entered a downtrend. The MACD lines crossing downward signal that momentum has shifted from bullish dominance to bearish dominance. The histogram flipping from bullish to bearish is a clear sign that momentum direction has changed. Meanwhile, the RSI continues to move lower, indicating weakening market strength. Buying pressure is insufficient, and the quality of rebounds is deteriorating. When these three appear together, the essence is a price breakdown, a momentum flip to the downside, and continued weakening of market strength. This is not a normal pullback, but a confirmation of a trend turning weaker. As for downside targets, we should focus on the 0.618 retracement of this upward move. That 0.618 level sits around 89,630. This area also aligns with a previous low, forming a key confluence zone that must be closely defended. If the conditions above are met, MA100 pressure remains. MA20 is broken and cannot be reclaimed. MACD forms a bearish crossover, and RSI continues downward. Then the downside target clearly points to the 0.618 retracement, around the 89,630 level. More importantly, this is not an ordinary retracement zone. It is a confluence of the Fibonacci 0.618 level, the previous high and the previous low. The significance of this area lies in the fact that it represents the final structural defense line for the bullish trend. Once price reaches this level, there will be clear and intense battle between bulls and bears. It will not be a simple straight drop or bounce, but if this level fails to hold, the market will evolve from a corrective pullback into a larger scale bearish structure. On the weekly chart, the MACD is approaching a bullish crossover, but it has not been confirmed yet. Therefore, the weekly structure has not shown a clear strengthening signal. If the weekly setup fails to complete this formation, the weekly chart will not turn strong. In the short term, this could drag down the current recovery attempt. From the weekly perspective, there is still some hope of repair, as the market is attempting to recover from the broader downward structure. However, this is one of the most common and most dangerous traps in trading. A bullish crossover that is about to form but hasn't formed yet, with shrinking volume and no confirmed reversal. In other words, if the weekly chart wants to develop a true recovery trend, it needs cooperation from the daily and 4-hour charts. If the weekly chart is to rise, the daily chart must push above or at least approach the 100-day moving average, and it must hold a 20-day moving average. Even if it breaks below, it must quickly reclaim it. If the daily chart breaks below the 20-day moving average, and both MACD and RSI weaken, the weekly bullish signal becomes invalid, and price will continue to fall. So as long as the daily chart shows MA100 overhead pressure, a break below MA20 that cannot be reclaimed, a MACD bearish crossover, and a declining RSI, the potential weekly bullish crossover will be invalidated, and the rebound will be completely over. Right now, focus on two key points: whether MA20 can hold, and whether daily indicators weaken together to form confluence. Once the signals align, price will drop toward the 89,630 support zone and officially enter a downtrend. That's all for today's video. See you tomorrow.